Welcome to the Infinite Wealth Podcast, where we teach clients how to build wealth and create passive income without the risk of Wall Street.
Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso, and we just wrapped up our interview with Zach Walkerlieb of the Walkerlieb Group, and what we were talking about, or it was entitled "Our Crystal Ball for 2020." Right?
Yep.
Yeah.
And it was good. We had an expert. I mean, we have a lot of our topics on this podcast has been about real estate. And here we had, I would say, an expert with boots on the ground, right? This is what he does. And it's good to get his input as an expert. And he also shared some things and some tools and questions for you to ask and use for you to find an expert in either the local area or whatever area you're looking to invest.
Yeah, I was impressed with Zach. Is we hit on a bunch of different topics in here. We talked about interest rates. We talked about taxes. We talked about the local real estate market, the national real estate market, and you could just kind of tell his depth and breadth of knowledge that he had on all those topics. It was very impressive. And then also, man, I like it when we remember to ask our guests for book recommendations. Yeah. Is at the end of this interview is he shares 5 with us on air, but previous to that we asked him, and he rattled off probably 10, and that always impresses me when someone is well read. And so a couple of those points that always stood out. The other thing that he said was, and what did he say? He said that he has kind of a mantra that was taught to him pretty early, which was invest in what you know.
Mm-hmm.
Right. And I agree with that 100%. And my personal belief is that if more people followed that mentality, they would be much, much better off in the long run.
Totally.
Yeah. Anthony, what about you? What are some thoughts?
Well, I would say if people invest in what they know, I wonder how many people would invest in the stock market.
Very few. Very few.
But no, it was another enjoyable podcast. I think we had a very good guest, and I'm sure you're going to enjoy it.
All right, today I want to welcome Zach Walkerlieb of the Walkerlieb Group with Coldwell Banker, and we're just going to jump right into it. Zach, tell us a little bit about your background and how you got started in real estate.
Awesome. So I am born and raised in Las Vegas. I'm a 4th generation local here, so we're very excited about the decade ahead. 2020 is looking good so far. Mm-hmm. But I graduated college at Santa Clara University in 2011, and I was studying finance and political science, and I was kind of looking for what would be the best career for me. And I interviewed up in San Francisco for UBS and Goldman Sachs, and they were like, "You want to be a financial analyst and sit behind a desk for 80 hours a week and make a little bit of money?" And I was like, let's see what Vegas has to offer. So I came home and then interviewed with Bob Hamrick at Coldwell Banker, who has been my mentor for many years now. And he said, you're not going to make much money your first year, but all of your success or failure will be on your shoulders. And at the end of the day, you can make unlimited money. Mm. And I said, well, I'm coming home to Vegas and I'm going to do real estate. And so I got started in investment real estate, and I was underwriting properties, during 2012, 2013, 2014, when all the investors were in Las Vegas. And we were just underwriting a ton of properties every day for them and saying what would be the best thing to invest in. I was writing 40 offers a day trying to get offers accepted in that time frame. So I started an investment, and that really gave me a great understanding of how to value real estate, both from the investment side and from the home purchaser side. I had a really intricate knowledge and foundation there. And then I grew and I started doing relocation, and I became the listing specialist for all the relocation in Las Vegas. So I was managing the listings for executives moving in and out, or if you were a company like MGM and all those, I was handling people moving in and out of Las Vegas, and I did their listings. I eventually grew to be one of the top 30 under 30 in the world for Coldwell Banker in 2016, and then again in 2018. I've been named the top 30 under 30 for the National Association of Realtors as well, so I've been recognized nationally and internationally. And then locally, I've been one of the top 40 under 40 for our Greater Las Vegas Association of Realtors, and have been also named top 100 men in real estate. And I'm now on the Leadership Academy for 2020 for the State Association of Realtors as well. So had a very fulfilling career so far, and I think it all started from the investment perspective.
Absolutely. Congratulations on those accomplishments.
Thank you.
Yeah, I mean, I knew that you were successful. I didn't know so much about all the details. Worldwide is pretty impressive.
Well, yeah, I mean, it was a lot of work to get there, but it's been great. It's been very, very, very exciting. I'm happy that I made the decision to get into real estate.
Perfect. Now I know we're talking about the crystal ball.
Yeah.
Right. And there's something I want to ask you. There's this rumor going around, and I want to put the. I'm hoping that we can settle it here on the Infinite Wealth podcast. And you made a post on Facebook, and I've heard it from other sources that Tom Brady is looking for a house in Las Vegas.
Oh man,
If you can't say, you can't say, or maybe you already said without saying. But can you comment on any of that?
There's rumors that the development, the Summit by Discovery Homes. There's rumors that he was looking in there and may have purchased.
Okay.
So we don't know.
I also heard he was looking in Tennessee. Have you heard anything about that?
You know what? There's a lot of people that have money on this. There's sports books here in Vegas, and they're putting money on it. So you might release some rumors to get some money flowing in one direction or the other. But I would say that I think that there's a high possibility that the Raiders get Tom Brady.
Interesting. I still, you know, my love and hatred.
Yeah, I like it
for the Raiders and the Patriots. But I would welcome Tom Brady here.
I'm excited for the stadium. We went to preview Las Vegas together, and I was not excited for everything. I think it's an interesting investment for a city to make, right? Yes. You usually don't make money back as a city, but
correct.
With the numbers that we saw, seem pretty interesting. If we get the Super Bowl and the NFL draft is here, we might recoup some of our investment. And if we get Tom Brady, hey, I'm pretty happy.
Yeah,
I'm all right.
I'd just be happy that he goes somewhere else besides Boston. Right? I'm tired of him beating up my Steelers.
Yeah.
But okay, let's talk a little bit more about real estate.
Okay.
What's your view on what's going to happen this next year? There's a lot of talk of recession, or maybe that's going to happen later. What are you seeing being on the ground?
So when we look at real estate historically, for the most part, the appreciation cycles are pretty long in terms of their nature. They don't fluctuate as they're not as volatile as the stock market. They will have 20-year runs, and that'd be pretty normal. Mm-hmm. So, we had 2008 happen, and we're 10 years into it. We could still have a pretty fairly long cycle ahead of us, potentially, and with normal recessions in mind. One thing to consider is what's the supply and demand of real estate right now. Our inventory levels just dropped to 5,200, which is the lowest it's been since late 2017, early 2018. So in Las Vegas in particular, we are in an incredibly limited inventory market. At the same time, we have still historically low interest rates, so our buyer pool is strong, and we're looking pretty good. So, we could have a very good market ahead of us. This is now looking at national, we're seeing the same trends. We're limited inventory everywhere. One of the big real estate coaches out there, Tom Ferry, he's Mike Ferry, Tom Ferry. He just released information to all of his coaching clients saying, we're in a limited inventory market. Here's how to address it as a real estate agent. So it's much more national of an issue than just Las Vegas. We are seeing this trend nationally. Everyone is concerned about a housing shortage because builders are not able to build as much as people demand. And that's either due to regulation, availability of resources, land, all of that stuff, where the cost of development or the ability to develop is somewhat limited. And so, yeah, we're looking at a limited inventory situation probably for years to come.
You had mentioned some stat of the amount, and again to Vegas, about the amount of people, the homes being built, to the amount of new net people to this town. You want?
Yeah. So this is actually crazy. So, in 2005, 2006, 2007, we were building over 25,000 new homes a year in Las Vegas. So we had an enormous amount of properties being built. And if you're living in Las Vegas at the time, you saw new homes everywhere. And then what happened? It went into ghost town mode, right? They built homes that people just ended up not living in. And that was a big problem. So we collapsed. It was part of the issue of our collapse here in Las Vegas. Well, now we have more people moving here from places like California that are heavily taxed and burdened, and they're coming to Las Vegas, and we're only building about 9,000 new homes. This last year, we built 9,000 new homes, and the year prior, we were building like 75, 8,000 new homes. So compare that to over 25,000 new homes, where we have over 40,000 people moving here, net migration every year. So we're not building enough inventory to meet the demand. And that will only exaggerate itself over time. So over a 10-year run, as more people move here from states like California and other places where Vegas is attractive to them, we're only going to continue that trend.
You mentioned the buyers pool and a lot of people coming from other states. Do you see much of international money kind of coming to Las Vegas?
America in general is very attractive. So the United States is attractive in terms of international money. And then
now, you mind expanding that? I think a lot of times people in the United States, and I am as well, we have these blinders on. We just think like really every country's like us, and we have these freedoms. And
yeah. Okay. So one of the best things about the United States is we have private property rights. We're a capitalist nation. We believe in private property, and so we own our land, we own our homes. Which means we have the ability to dictate our assets' future and our investments' future. And so that's unique around the world in many ways. And so that's a big plus when you compare us to the rest of the world, especially China, where all real estate sale is through the government, right? So
yeah, that's interesting. I did not know that.
Yeah, so we're much more free in our real estate and personal property than in other countries. So not only that, I mean, you look at our stock market right now. Our stock market is where you place money because we're at a very comparative advantage to the rest of the world. And real estate is also that way. We have a great real estate market, especially if you look at certain cities like Las Vegas, I think San Antonio, Nashville. There's a lot of amazing cities to invest in the United States. And so, yeah, international money is coming here. For sure. We're still seeing a lot of Canadian money, Chinese money. Other Asian countries are beginning to come here, and I'm sure that will also continue.
Okay, so you got your crystal ball, looking through your crystal ball, where do you see some of the appreciation rates for 2020?
So I don't think that we're going to continue to experience the 10, 15% appreciation year on year type thing. In Las Vegas, we even had zip codes in Las Vegas over the last year have little bouts of depreciation. So I think that it's going to be very area specific. How much appreciation we see and experience, it's going to be where you buy, and that's going to exist both in Las Vegas and wherever you happen to purchase. I would get to know your local market very, very well, because one zip code will appreciate much more than another zip code will appreciate. And one zip code will hold its value over the long term much better than another zip code will.
That's a great point. How can somebody find out about their local market and those local area codes?
So resources like Zillow and all that stuff, that's phenomenal as a general overview. But if you're going to be a savvy investor, or even if you're a first-time home buyer or second home buyer, I mean, what you need to do is eventually get to the nitty-gritty. So having these online resources like Zillow or others, it's great to have a bird's eye view, a helicopter view. You're looking down on the market and you're saying, okay, what's this general information here, and what can I gather? How can I become knowledgeable about what I'm about to invest in? When you get down to it, you need to align yourself with a professional that will guide you correctly, because they're going to know the ins and outs and the details, and they're going to take in the information that you give them, what's purely yours, and what you want to achieve, and they're going to combine that with the local knowledge, and that's something that a general resource just cannot do. So you should definitely seek to align yourself with a true professional in whatever market you decide to invest in.
Okay, so what are some ways or things to look for if you're interviewing a real estate professional? Like, how do you find? I know if you go to Realtor.com, there's plenty. You go to Zillow. I mean, they're everywhere.
Yeah.
How do we find somebody good?
You need to ask them questions, and they need to relate to you very well. So ask them, how many homes do they sell each year? How many homes have you sold in the area that I'm trying to purchase in or invest in? What's your background? What do you know about this investment vehicle? I mean, if they're trying to do a certain investment structure, then having an agent or a real estate agent that knows that investment structure is supremely important. I mean, things like 1031 exchange, it's a very normal real estate investment thing that you'll run across. And so,
would you mind explaining to Cameron what a 1031 exchange is?
So 1031 exchange is to defer your tax. So let's say you own a home in California, a rental property in California, or an office complex in California, whatever it is that you own in California, and you're like, I'm out. I'm done with California. I want to move to a different market that is better. So you decide that you move to Las Vegas. So you sell those homes or those rental properties, that rental complex, whatever it is. You take the profit of that and you 1031 exchange it into properties here in Las Vegas, and you defer the tax on that, so you won't end up paying tax. And that's a good way to build wealth without being taxed.
Perfect. Okay, great. You got that, Cameron? Okay, I'm sorry. Go ahead. I didn't mean to divert, but you were explaining 1031. So go ahead, and you were explaining like how good of a vehicle that was, or.
Well, yeah. So you essentially you can defer tax for many years and continue to buy into better properties or better markets and continue to exchange. So 1031 is a good vehicle, but it's an example of a knowledge base that when you're working with a real estate professional, that they should know about these things, because that's a very basic thing. There's an enormous amount of things that you can do as an investor in real estate that your real estate agent should be much more savvy than you are when hiring them. They should know other solutions and other options for you. And in addition to knowing about the market, they should be able to take in what your goals are and what you want to achieve, and then direct you with the information they have.
Now, if you're looking to buy a property for an investment, how important, or is it important, if you're looking for a realtor, that not only are they knowledgeable about that, but that they're doing it themselves?
I think it's very important. I think that you should have people who have experience in it, either joint ventures or personal ventures. They should have some type of understanding of the process, because you want them to have felt and understood what goes on in that transaction in a deeper way than just the contract and writing an offer and the basic stuff. You want someone that has a knowledge base.
Perfect.
As an investor, you mentioned a couple times would you be looking at opportunities here locally in Las Vegas, or are you going to be looking more nationally? Let me ask it a different way, kind of what we discussed earlier was, if you had $200,000-$300,000 in cash and you were looking to make some investments, would you be looking locally or nationally?
Yeah. So here's the great thing. So it totally depends on you as the investor. So if you're a conservative investor, you know the Las Vegas market, you know it really, really well, You can take your $200,000, you can buy a property, you can get cash flow on it, and you can get great cash flow on it. And the potential for appreciation over the long run, 10-year cycle or something like that, is good. It's very good. So you can take that $300,000, you can invest in a property, you can cash flow. Not a bad decision. Is it the best decision? I don't know. There's places like what we talked about, Huntsville, Alabama right now, where you can buy a $110,000 home, rent that thing out for $1,000 a month. So you take $20,000 at a time. Now you buy 10 properties instead of one property, and you're cash flowing all of those on a monthly basis. And if there's any appreciation play in there, that's dependent on the market that you're targeting. But and it depends on how savvy and how aggressive you are and want to be. So the national market right now is wide open, and there are areas like Las Vegas or places in California, even San Antonio and other places, they're beginning to become saturated with savvy people. So if you're not going to be hyper aggressive, then I would just say invest in what you know, buy in what you know, be in the market that you know. Real estate is always and has been a good vehicle for wealth growth, and tax deferment, among many other things. But if you are going to be aggressive, absolutely consider the national field, because it's looking bright.
Well, on the national level, is there any advice you would give to some investors like, hey, I live where I live, it's too saturated, or maybe I live in New York or California and just the numbers don't work. I want to look at some of these developing and growing communities. But what I find is odd, like if you buy a stock, right? Let's say you buy Tesla, right? You don't go to the plant. You're not meeting with the team, right? But if we buy a house as an investment, we feel like we need to touch it. Like we need to be there. And I think it's in part because we're used to a house, we think of it as like our home, right? But this is not a home, this is an investment. What advice would you give somebody who's contemplating investing out of state where they can't touch and feel it? Or it really could be don't. I mean, we always tell people, if you don't feel comfortable investing in something, then don't do it.
Yeah. So one of the best pieces of advice I've ever received is invest in what you know, which I mentioned already. I don't do day trading on the stock market. Why? Because I don't follow stocks on a daily basis. I don't have the knowledge base to invest in stocks on a daily basis. So I don't do it, because I probably wouldn't be great at it. I might get lucky on one shot, but I'm not going to be excellent at it. It's not going to be my main vehicle for wealth building. The same thing generally holds true for out of your knowledge base areas. If you don't know the market, it's very difficult for you to understand it and grasp it and understand what you're putting your $20,000 or $200,000 or $1 million into. You have to have some idea. And so what people do, if they're going to do that, is they try their best to understand it. They will spend a little bit of time in that city. They'll sit there. They'll understand the market. They'll speak with professionals. They'll align themselves with professionals. They'll form a network so that they know that they're going to be investing in something that they can grasp.
One of the things you said in there a couple of times is invest in what you know, and I agree 100% with that. Is maybe could you share with us how you've invested, or maybe the better question is about your business, right? Is maybe compare that with other realtors that are out there, right? Is for Anthony and myself, is one of the biggest investments that I personally make is back into my business, right? And so I'm trying to highlight your business compared to others, because there is an investment that goes into it, and to get to the point where you're at, it takes a lot of time and a lot of energy, and you got to be really good at what you know, right?
So the average nationally and here locally for a real estate agent is about 4 homes a year. So the average agent sells about 4 homes a year, and the median, somewhere around 7. So 7 homes a year. I typically sell about 10 times that. So and the top top 1% or top 3% actually. Top 3% of real estate agents nationally sell about 24 homes a year. So if you're selling 24 homes or more a year, you're in the top 3%. You're a very good agent. If you're selling above 50 homes a year, you're an excellent agent. And that means that if you're selling, let's say 30 homes a year, you're doing more in a year than some agents will do in their entire career.
Yeah.
So what that means in the relationship when they work with their clients is how much more information will the person selling 30 homes a year have on what the market's doing, what this neighborhood should be valued at, pricing strategies, what you should offer on the home. What would their knowledge base be in comparison to someone who does that 3, 4, 5, 6 times a year? It's going to be light years ahead. So make sure that you're investing your time in your relationship with someone who will know the market and who has experience in it, because the likelihood is that their experiences far outweigh what the typical agent has.
Yeah, absolutely.
Okay, so where do you give us an idea of where interest rates are now, but compared to big picture? Because if we look back 20 years,
Yeah,
they're pretty darn low, right?
Yeah.
But so give us an idea of where we're at now, and where do you think they're going to be going forward?
So interest rates are really good now. You're anywhere between 3.5% and 4.5%, depending on what. Yeah, it's crazy. And historically, we're at an all-time low still. The Fed dropped the rate again, as we all know, recently, not so recently. I kind of anticipate them doing it another time, even though they say that they're.
I do. I hope they don't.
I think they will, and I don't know if it's going to happen this year, but it might. It really might. They say they're not going to do anything this year. I don't know. It's a big driver of our economy, and I think that those in that arena are trying to get while the getting's good, and try and drive the economy through that method. And there's been some talk about limited funds available out there on the global company scale, but the Fed's pumping, and they're probably gonna keep pumping. And I think that the interest rate might.
What do you mean by pumping? You mean pumping dollars into the economy with the quantitative easing?
Yeah,
and all of that.
It's a lot of money. It's being pushed into the economy right now, and long term, obviously, that's not great. We need to be much more rational about how we handle our money as a country.
Yeah. And
But
I know with interest rates, interest rates go both ways, right? Whether you're the borrower or you're the saver.
Yeah.
If you're the borrower, you want a low interest rate because the lower cost of the money. But what that does, it hinders people, it disincentivizes them for saving because they're not earning a lot. So even if interest rates go, or when they go up, maybe cost of lending might go down, but there's also some other good sides of it. There's some advantages of your savings or other ways. We need to incentivize people to save.
Oh yeah,
and not just borrow and spend.
If you save, you're losing money. You're forced to spend your money.
Right. Exactly.
Yeah, it's unfortunate. What I will say is that the Federal Reserve is not a free market. It is a controlled market, and eventually controlled markets fail. And we should not have that in the United States. We should have a free market where we're able to, there's something ethereal about it, where it's bigger than we can all see, and it's bigger than we can all touch. And if you have a person or a body dictating what those rates are, you eventually lack a knowledge base to make the right decision. And only the free market can truly understand where it should go. And so I think that it's nice that we're in such a boom. Over the long run, I'm very concerned about what printing money does, and having the rate so low, because it's not natural. Normally, you would have a higher interest rate, and you would see safer investments instead of chasing yields.
Exactly. Zach, you sound like a great investor. I wish you sounded like a politician. Or let me rephrase it. I wish politicians would say what you just said.
Yeah. Well, I think that the time will come where politicians will have to address this issue. And I hope that it's not at a time where it's too late.
Okay, perfect. All right. Now let's talk about one of my favorite subjects, taxes. Okay. With the latest tax changes, I felt it made a big impact, or maybe a disadvantage, or maybe not making such an advantage for somebody buying a house by them raising the standard deduction. Now, if you're married, $24,000, and in essence, well, Cameron, so you you add up all of your itemized expenses, and you take your standard deduction, and you take whichever one's higher. And what Congress did is they raised the standard deduction so high. I think a lot of people are not going to have a direct tax benefit from buying their home, because the biggest tax deductions are typically your mortgage interest and your property tax.
Mm-hmm.
Now, that went into effect in these last 2 years. Are you seeing, is that changing the market? Are people buying less or not buying?
Well, you still have the mortgage interest deduction.
Correct. You do, but your itemized deductions, including that, would have to be more than 24 grand.
Correct.
So I know a lot of people were like, hey, man, I just bought my first house. Now I'm going to save money in taxes. Well, you know what? You were smart and you didn't buy the total house that you qualified for. Yeah. You bought a nice house in your budget, and that interest isn't high enough. But are you seeing any impact from the tax changes for people buying?
No. And here's why. And I think that if the mortgage interest deduction goes away entirely, and it's not under that 24,
mm-hmm.
I think that we will have a little bit of a problem. But right now our supply is so limited, and that's a national issue, and our wage growth is phenomenal. Our wages are growing, and so what we saw in the past recession and collapse was that wages were not matching the median home price. Well, wages much more now match the median home price, and we're continuing to grow. Our hourly numbers are up. Construction in Las Vegas is pushing a lot of that, which is a little concerning. But we have great wages right now, and that's a national trend as well. So people are making more money, and as they continue to make more money, I think that things like the tax burden that they may or may not have are pushed down the road a little bit. And if things like that change, I think that they will have an impact, but at the moment we're not seeing that.
Now, you'd mentioned a couple times on how great of an investment real estate is.
Mm-hmm.
Would you mind expanding on that? Like, what makes that so great by doing something else with your money?
Okay. So one of the things that is a game changer about how to think about taxes, and this is in a book that we talked about, but the government incentivizes people through taxes to invest in things that the government cannot handle. For example, real estate. The government cannot house everyone. So what do? They give a major tax incentive for people to invest in real estate, to be the housing source of the people of the nation. So you invest in real estate, you have many tax advantages: 1031 exchange, mortgage interest reduction, whatever it is. There's tax advantages to investing in real estate. It's highly incentivized by the government to develop property, to rent property, to do all of those things, because the government does not have the tools or the vehicle necessary to implement something like that. It needs the market to build and rent. People are going to rent forever. and it's probably going to become more and more expensive to own property. The one concern with that is the baby boomers, and if millennials don't buy, and baby boomers end up selling all their property, will there be an influx of inventory? That's another question to ask. But let's just say that you have $200,000 and you want to invest the money, or you have $20,000 or $40,000. You can buy an investment property, and this is the very basic level. And so you say, okay, it's a $200,000 property. I'm going to put $40,000 down, and it rents for $1,700 a month. Well, at the end of the day, you're probably going to be making either $100, $200 on that a month after mortgage, property taxes, property management, all that stuff. But what's really the value in all of this is that someone is paying down your mortgage on that for the next 30 years if you have it rented out. You invest in a $300,000 or $200,000 or $250,000, whatever it is that you invest in, you're leveraging an incredible amount. This is something that you cannot do in the stock market unless you're, again, doing options or something like that. But you're leveraging in at an incredibly low interest rate right now, 3.5%, and even 8-10% would be great if you're cash flowing. So you're leveraging into this monster asset, and someone's going to pay your mortgage for 30 years. And so at the end of 30 years, you have a free and clear property that's now just cash flowing money. I mean, that's an amazing investment, and that's like the very base starting point. And so I think that, you can only go up from there.
Yeah, let me just, you made some great points, Zach. And one thing I would add would I guess too is the ability to deduct the depreciation.
Yeah. Oh yeah.
You want to expand on that? If you buy a house for $300,000, explain how depreciation works.
But you're essentially deducting depreciation every year. So it's another write-off that you have.
So maybe you put in, say, 30,000, right? Because you put in 10% or 20% down, but you're able to depreciate. In essence, depreciation allows you to take a tax deduction
and losses.
Yeah, for the cost of the house. And also, when you sell the house, you have the option of a 1031, like Zach explained, or if you want to sell it, it's going to be a capital gains rate, which is the lowest tax rate we have.
Correct.
So and probably what I like, another thing I like about it, it's backed by a real asset.
Correct.
Right?
You control it.
Yeah. You have real land and a building that if something goes wrong, you have that collateral that can either allow you to, maybe you rent it, it's a great cash flow, or you have the ability to sell it.
And Maslow's hierarchy of needs. Everyone needs a house, man. Everyone.
Exactly.
Forever. Everyone needs a house, and you own that. You got an asset. It's going to house someone.
Exactly. And Maslow's hierarchy of needs is what we use to describe our hierarchy of wealth, where we have these basic needs and we need to have some money that is certain. That is, we have certainty, we have collateral and control. Like that's what we call our tier one. And then we go a little higher up and we lose some of the certainty or control, but ideally we always want to have some collateral. So thanks for throwing that back to one of our beginning podcasts of our hierarchy of wealth.
Yeah, right on.
Zach, we've had a ton of really good information. Anthony, you got anything else before we wrap it up?
One thing I learned when we were talking today, that you did the underwriting, meaning like you crunched the numbers for some big hedge funds. Mm-hmm. Is there anything you learned or well, I've heard of this black inventory, mm-hmm. right? There's these shadow banks inventory. Or shadow inventory, these banks that own these homes. Yeah. And supposedly they're just not, I don't know. You could do a better job explaining it.
I'll give you some anecdotal information. There's this guy that does REOs, so foreclosures in our office. He's had the relationship since the collapse, and he has a guy from a major bank send him a new lead. He says, "Here's a new REO." So he calls the guy up and he's just chatting with him, and he's had the relationship for a long time. And he says, "Hey, what's going on? I want to catch up a little bit on life." Well, this guy that sent him the lead from the major bank was one of several in the state, in the city. He was one of several for the bank back in the day. He's now the only guy nationally.
Oh, wow.
So are there a bunch of foreclosures sitting out there? No one's doing anything with them.
Okay.
So what's the effect? I don't know. There's the vacant properties have gone down significantly since the collapse. They're non-existent for all relative purposes at the moment. The investors that bought in bulk, the thousands of homes,
Mm-hmm.
they're sitting on them, man. They're cash flowing like mad, and I don't see them relinquishing them currently. I don't see banks upping foreclosures en masse anytime soon. So everything that is sitting there, there's no real effect on the market.
Okay, cool. Thanks.
Yeah.
Great insight, Zach. Where can these listeners find you? Maybe give us your website and contact info.
Awesome. So you can reach me directly on my cell, which is 702-743-9998, or you can visit my website at walkerliebgroup.com. WalkerliebGroup.com.
Awesome. Thanks. We'll be sure to include that in the show notes.
Now, one thing we like to ask when you have guests, if we remember, is to share some sort of book that may be helpful.
Yeah.
And ideally, one thing, we're looking for maybe a book that not everybody's heard of. And we've heard of Rich Dad Poor Dad. We've heard of Becoming Your Own Banker. But is there anything that maybe is not in the top of everybody's list that
I'm
you had?
going to give a few on what the future is, just so you have some information so that you can make your own decisions. Number one, Robert Kiyosaki, right? We're going to go with him. I think the book Fake that he just released is an important book, just so you have that information to compare it to your other information. Because if what he says comes true, watch out.
Well, and he talks about the Fed, and he talks about real assets and real teachers, which I thought was very, very good book.
Yeah, oh yeah. What's the future and why it's up to us? That's a great one. It's talking about a lot of the technologies that are going to be coming to fruition here soon. Why We Age and Why We Don't Have to by David Sinclair. That's about medical technologies that are coming and the extension of life and health span. That's future technologies that I think you should be aware of for your health. Yuval Noah Harari wrote a book called Sapiens, which is a great foundational book, but his second book, Homo Deus, is also about the future of mankind. And I think those books, when combined, will give you a great picture about what the future may hold, because these are experts in their field, experts in their field, and they're sharing their most researched knowledge available. And so I would recommend those books so that everyone has a good general knowledge base about what the future's bringing.
Awesome. Thanks, Zach.
You're welcome.
Great. Thanks. And go make it a fantastic day.
Thanks for listening, and be sure to subscribe so you don't miss out on the next episode. Also, check out our website, infinitewealthconsultants.com, to find our podcast along with other additional resources.